What technical indicators are the most relevant when trading in cryptocurrencies?
Yeah, good question. Technical indicators for cryptos, how should you do it? So I'm very cautious with the word indicators. Most indicators are mathematical formulas that have been applied to price data. So they lag, they are averaged out, and their use is limited. However, you get things like volume, on-balance volume, which actually introduces new primary data. In other words, how many people transacted during this time period or at that price point, if you have the volume in a horizontal histogram, which also very usefully highlights as key levels of significance. You may find them clustering around round numbers. People are human. There's a tendency by a 10, no one goes 9.997, so there's vacuums just before. I have a couple of rules that I teach my guys, that there's actually void pricing, where you clear that pricing very easily because there's not a lot of orders clustered there. And then at the round numbers, you normally just run the round number because there's so many orders, they can't all be executed at market. You get a rush of orders at the logical levels. So you get that particularly in the what I'd call the real world markets with derivatives and options, but you still get that human logic of a round number. People don't enter. Satoshi's is 8 digits. No one goes, I'll buy at 990765543 down to 8 digits. So there is that tendency. So often they just bracket creep by a couple of numbers when people are in the bid and ask spread. So you get that same principles still apply. So we get the key levels of significance, we get the volume is new data which shows support, and price patterns. Patterns is human psychology at work. It's the aggregated human psychology of fear and greed dancing out of all the participants in that market. It's kind of like the sardine shoal with the shark swimming through it. They make this beautiful tunnel that is this equidistance every side around the shark, and it's driven by fear and greed. Greed potentially on the shark side, fear on the sardines. They need to keep a certain safety distance. And despite the movement, there's this shimmering orchestrated dance. And no one participant is controlling it, but as a collective, they are doing it. And that is a market. I can't describe it better for you. And if you can stand back and away from that and recognize the patterns, and you can say, okay, we've done a fair amount, that's the initial impulsive move. We're now in something that looks like a consolidation, only it's squeezing, getting tight. It's just relaxing. It's done a fair amount of move. It needs everyone to get used to the price at this level. It's clustering around a round level. It's going low volatility. People are now accepting these new price points. The next move is likely to be continuation and expansive when the volatility and the volume returns. I can get in real cheap with a very tight mental stop if you're in the crypto space, and I can get an expansive geometric idea because the same amount of leverage, because some people are using leverage, same amount of participants and the same amount of money that was in the initial move is still in the trade or out of the trade waiting to get in later. So there's a natural geometry to charts. This is what makes Fibonacci concepts very popular. So these are the tools that we use in our methodology, and we pull all those together.